Between the flurry of market day releases that we've seen to the US's looming election and equity markets pushing higher, with the S&P 500 hitting a new all-time high for the 47th time this year, it's definitely been a busy start to Q4 in October. Today, I am joined by Baylee. Thanks for joining, Baylee. What have been the key themes for October?
Well, there are quite a few things that we could touch on, but trying to group them together, markets have been impacted by three key things. So firstly, the flow of market data releases we've had, particularly in the US, from company earnings to GDP figures. We also had the UK budget announced this week, which triggered quite a significant market reaction given the plans to increase borrowing. And last but not least, equity and bond volatility, it's back in focus in light of the upcoming US election.
Right, lots to dig into. Let's start with the first theme. What has the market data releases been telling us?
Of course, we have the usual monthly macro releases, but we are also currently in the middle of Q3 earnings season. On both fronts, we have seen relatively strong and quite reassuring data. US unemployment dropped to 4.1% at the start of the month, and US growth remains quite resilient, outperforming its European counterparts. Company earnings, they've also impressed. Tesla, they saw a notable 20% gain after their results, but more generally, nearly 80% of the companies that have reported so far have beat profit expectations. These data releases have definitely created more confidence that the economy is on track for a soft landing.
Yeah, it's definitely a very positive tone in the US currently. Switching over to our second point now on the UK budget, which was announced on Wednesday. What were some of the key takeaways announced by the Chancellor?
Leading up to the budget announcement, the focus was on how the Labour government would repair public finances, given a £22 billion fiscal black hole, and how they would restore economic stability. Essentially, Labour announced a tax and spend strategy budget. They raised taxes on businesses and changed fiscal rules to fund increased spending towards public services.
What has been the market reaction to all of these policy announcements?
Markets were already nervous about the prospect of increased borrowing going into the budget. Gilt yields have been rising over the month. Essentially, gilt investors have been demanding more compensation for them lending to the government, given the risk of increased debt. The reaction during and post the budget was definitely more of a roller coaster. At first, we saw gilt yields actually trend downwards. There was no kind of major surprises announced by the Chancellor, but as investors digested the information alongside the Office for Budget Responsibility, or OBR, reports, and looked through to the longer term impacts, we saw yields move upwards pretty quickly to their highest levels since November. And as a last point, it's worth noting that we still expect the Bank of England to continue on their dovish tilt, cutting rates in the nearer term, which should be beneficial for gilt's performance.
Okay, that makes sense. Ending on our final theme now. US election is next week, Tuesday. Betting pools are very, very close. What has been the market reaction in the lead up to this event?
We've mentioned this in past episodes as well, but we've seen signs that the market is leaning towards a win for Trump next week. Until more recently as well, Trump's media and tech group stock has also seen large daily rallies. But as you say, it's extremely close within polls. Last time I checked, Trump had a 48.5% chance versus a 48.4% chance for Harris in the betting polls. So there's really nothing between them. This uncertainty has triggered a pullback in markets, with US equities ending a strong 6-week rally. We've also seen increased buying of protection on equities for the period following the election, and that's a clear sign that the market is anticipating some volatility going into next week.
It's definitely set to be a very eventful week for the US. Thanks, Baylee, for that. That is all we have time for this week. As always, I'll round up with our stat of the month, which is focused on the S&P 500. So despite the volatility, S&P 500 is actually up nearly 24% year to date, which is its best year to date performance of the 21st century. So very impressive numbers here. Thanks all for joining, and we'll be back next week with a new topic that has piqued our interest.